The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hello, folks. Looking good, Billy Ray. Feeling good, Lewis. This is Larry Pesavento setting in for the esteemed Mr. Logan, who's recovering nicely from what we've heard. And hopefully he'll be back as soon as the gods, trading gods, allow him. The first chart that I've posted in here today is the chart of the equinox, what it looks like. And the reason why I wanted to go into that, most of you know I hold Dr. Andrew Lowe from MIT as one of the most influential people for technical analysis for us, because he wrote that book, The Non-Random Walk Down Wall Street, back in 2000, that basically proved that pattern recognition has a great deal of merit in the markets, and I'll always be grateful for him doing that, even though I had been looking at that stuff for years, as has many other people. He mathematically proved it, and basically, if you ever see the book, it is over 700 pages, and I'll tell you, it's got the most amazing complex formulas that you've ever seen. It's just truly amazing. Let's neither here nor there. I posted a chart of what the equinox looks like because Dr. Lowe wrote another book a few years after that on the evolution of technical analysis. And the first 50 pages of that book is designated to astrology. And he said that the very first technicians were the astrologers. And, they were looking at the same types of things we're looking at, only looking at it a little bit differently, because, they're looking at days and things like that, as opposed to, reversal patterns and, things such as that. So this is what we're trying to get across today, is that this stuff does work, but it doesn't work all the time. In fact, it works far from all the time. If you can get something that's somewhere between, a coin flip and a little better than coin flip, you've got an edge if you can use it with, good money management. But ideally, you'd like to get into the 70 or 80% category, which sometimes, you certainly can do, but not necessarily all the time. So that's the main thing that I'd like to focus on. The equinox, the autumn equinox, if you ever want to see something really spectacular, you should go to the deserts of Mexico, southern Mexico, near Cozumel and Cancun. There is the ruins of Chichen Itza, which is part of the Mayan civilization, and that's one of their the Pyramid of the Sun is there, and it's a huge pyramid. You can actually walk up. It's got stairs on it and stuff like that. But on the autumn equinox, the exact day and the time of the equinox at noon, when the moon, when the sun is directly over this pyramid, there's about 200. Well, when I was there were about 250,000 people there. That was more than 20 years ago. I wanted to go down and see this phenomenon because it's really quite spectacular. As the moon, golly, Larry, as the sun hits the top of this pyramid at noon on the 23rd, or whatever day it happens to be, because it does shift a little bit, what will happen is that the market, or the sun will, as it starts to go from east to west, it makes 45-degree angles along the sides of the pyramid, making it look like there's a snake moving down. As the sun moves around, it goes slowly, and it looks like a snake going right down. It's really spectacular, and it looks like the snake goes right out into the jungle, but it's really something. And it was really a spectacular thing. Hold on, boys and girls. We are having a price alert here in my euro, I believe. Yep. I'm trying to buy the euro a few pips lower, and my little beeper from the south here is telling me that we've got to get ready to buy it here about another 10 or 15 pips lower. So I'm going to keep an eye on that one. That's just a scalp trade. It's nothing spectacular to look at. I heard Tom mention about the fact that I'm looking to try to buy cattle. So far, they've been down. They touched the upper end of the buy zone, but I'm trying to buy them just a little bit lower. They've already rallied a couple cents off the bottom. So my guess is they'll probably come down one more time. So I'm still waiting in the cattle market, for a really good entry. It's a perfect pattern. The $64 question is when will we, get the completion of the pattern? Let me bring it up here to show you what we're looking at here. And here we're in the same predicament that I'm always in, and that is trying to find the chart of the cattle on my desktop. There it is, the one that says cattle. Boy, that's strange. Put it under something I can understand. All right, now we're going to put the cattle chart up, and you'll be able to see it. And we're trading at about a little higher this morning from what I understand from Tom. But we did hit that exact 1.618 at 135.70 Monday. And I still think we'll probably pull back one more time. So I'm not going to chase it here, but we'll have to just give it a little bit more time to see if it's going to come to our price. Frankly, folks, I have very little interest in cattle because of what's going on in the stock market. They keep me up all night, and because we rotate back and forth. Not everybody stays up all night, but Bart and I we take turns for the hedge fund to and that doesn't mean we're up all night. It just means if an alert goes off, we've got a trade set up, then one of us will put the trade on and then go back to sleep. But yesterday was my day. It'll be my last day. I'm having root canal surgery today, and that's not going to be. It's not going to be too bad, I don't believe, because it's just one tooth, and it's not. It doesn't seem to be as bad as it could have been. But another advantage of living to the ripe old age. So nothing else you can do about it. Okay. The cattle market. Let's go on to the euro. Now, the euro, if you had a chance to look at it, and I do believe I have it set up in here. If you'll give me 1 second. Yep, I do believe I have it. Nope, that's the wrong one. That's the old euro chart, and I wanted to get the new euro chart. Well, I'm not going to worry about that. Anyway, it's 877-927-6648. Larry Pesavento setting in for John Logan. Okay, the stock market yesterday was rallying a little bit, and what did it do last night? In a matter of about 3 hours, gave everything back, and now we've broken down below some key support that we had at 1938 in the S&P futures. We broke down in the support in the NASDAQ also. So all of that's telling us that it looks like this thing really wants to start to accelerate to the downside. Now, whether that's going to happen or not, I don't know, but it's certainly not getting a good start so far today. Okay. All right. Now, there's another trade that we have to really pay attention to because with all the activity that we're having, we're getting closer to getting to getting to our price here, and that is in the Canadian dollar. We are very, very close. I'm sorry for laughing, folks, but one of the things is when you're doing a radio show like this, you're logged into the Tiger Den, and we got some really smart people, and we have some really smart Alex in that room. But someone said if I was going to have an IRS audit along with my root canal, but no IRS audits for me. I've been audited so many times they've given up on me. I have a very good IRS attorney. Well, he's a tax attorney. He's not with the IRS, but he has a reputation for being pretty tough. And so once you get him on your side, they don't audit you too much. But I don't do anything wrong, so that's another good thing, which is really good. Okay, let's get to Canadian dollar here. My wife, Sarah, has been waiting for this pattern for almost 6 months. We have that giant ABCD pattern there that comes in around the 135 level. We're trading now at 132 and change. we're only about 150 pips away from the promised land on this if it gets there. But this is what we want to be watching to see if it can get to that level, because at that 134 and change level, it's going to have, the ABCD on the monthly chart. It's going to have two 1.618 expansions coming in at the same price. So it's got, and several ABCD patterns along with a really long-term weekly. There's a couple of smaller ones there that line up really nicely too. So this Canadian dollar is it might be one of those things that Tom always gave, really neat nicknames to, like King Dollar, which probably was the home run trade of the last few years from any advisory service, because he became bullish on that at 75, and he's still bullish. So, that's been one hell of a move, 30-some points over a several-year period. But given the amount of money that you had to risk at that point, is probably one of the trades of the century from the perspective of what I'm looking at. All right, let's talk about the market. Folks, the market has broken down badly. I mean, if you take a look here at we looked at the breadth. The breadth just gets worse and worse all the time. But frankly, it doesn't seem to make any difference to anybody, because they don't seem to understand that we're looking at some of the most bearish technical patterns that a person can possibly see. This is really not a very good situation when you look at these charts. I mean, fact is, I looked at them over the weekend. I said, my God, I said, they can't be that bearish, are they? And, and then yesterday the market bounced a little bit, but, really it doesn't, it didn't do anything. If I can get this NYSE chart to come up here, I think this is it. Just a second. Nope, that's not it. It's the one next door. There we go. This is what it looked like yesterday. You can see this is not even a dead cat bounce. It's so darn so weak. I mean, we gapped down after we had that big reversal day on the 17th when we had Mercury retrograde, and now we've gone nowhere, and now we're weakening today. So that means we're going to be taking out these lows, and we're going to gap down again. Right now, the Dow's down a couple hundred points. NASDAQ's down about 80 something, and the S&P's down over 30 handles. So whether this is going to be a continuation type move to the downside, or we bounce from here, remains to be seen. But it's really set up, for it to go lower. That's what it looks like. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, boys and girls, while we were out, the beeper went off again and the euro went down to the 111.45 level, which was the target of this ABCD move. And I know that I have this in here because I printed it out for my show, for the my regular show. And now when I'm looking for it, I'm having a difficult time finding it, but I will find it eventually. Maybe not in my lifetime, but maybe in yours. I'm not going to worry too much about it, but I think I found it. Shut the front door and raise the rent. Just a minute, I did find it, and you'll be able to bring it in here, and you'll be able to see it. And you'll notice that the target on this thing was 111.43. That's what we got down to. So whether this is going to bounce from here or not, we'll have to wait and see. But at least it got to that big ABCD pattern. And if you'll notice that the BC leg is a 382 of the AB leg. Last night I was chatting with Twentyman again, Jim Twentyman, and we were talking about the ABCD Thunderbolt pattern and stuff. And Jim reminded me that I was the one that got Charles Lindsay and Larry Williams involved with this because I saw it in the Gartley book on page 249. They had looked at a stock market course called the Frank Tubbs stock market course, which was nothing more than the ABC pattern. In other words, you buy at point D or you sell at point D. That was the whole course. He charged $1,500 for it. Well, in 1974, Larry Williams and Charles Lindsay came out with the Trident trading method, and that one they sold for $4,500 to the first lucky 1,000 people, and they sold it to 1,000 people. They didn't sell it to one person more than that. that was it one time, and they picked up their $4.5 million and ran to the next the next playground. And Larry went up to try to be a senator out of Montana, and Charles became a minister down in Georgia, where up until a few years ago he was still doing it. I lost contact with him after that, but that's really where the whole thing started. And that was on page 249 in Gartley's book, where he talked about parallel channels where AB equals CD, and that's the same thing that Tubbs did. He basically just pretty much reprinted it right out of the book. But Gartley didn't, there was no lawsuits involved. His comment on it was that it was such a good pattern that it would help a lot of people, and so that people would benefit from it, so it was not worth worrying about any lawsuits or anything like that, because it did benefit mankind, which it certainly does, because that's really all the markets ever do, folks. They go up, down, or sideways, and that's all you're looking at. On this particular one here in the euro, you're looking at a pretty symmetrical ABCD pattern, and it stopped right at the 1.618 expansion of this, and so this is one of the reasons why we're looking to try to buy it down there, because the risk here would have been relatively small, considering that the amount of gain that you're going to get off of this. But it did start in the right direction. Whether that means anything or not remains to be seen. But that's the real skinny on the ABCD pattern. Anyway, that's neither here nor there. One of the good trading methodologies out of the ABCD pattern is if you buy. If you like trading with the trend, if you buy when you break out of, you have the BC swing, and when you break out of the B leg, especially when you do it with gusto like we did here in the euro, that's a good trading system in itself, because your profit objective is down quite a bit. The amount of money that you're risking can be relatively small. Once you break the plane of the point B, and then you've got you're trading with the trend. You've got a profit objective that's at least 3-to-1 what your risk reward ratio is. So that in itself can be a really good trading system. I used to use it. Sometimes I ask myself, why don't I use it anymore? But sometimes I will, but not very often. But when you break that plane from point B, your profit objective is point D. So you've got a really good parameter of when you're going to be right and when you're going to be wrong, and it sets up just about perfectly. So if you're having trouble with finding a place to buy or sell, take a look at the ABCD pattern. It's a terrific pattern, and it repeats over and over again. 877-927-6648. Holy moly guacamole, we're halfway through, and down the stretch they come.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento setting in for John Logan. And John, if you're listening, I certainly hope you come back because, boy, we're hitting some of these great numbers that you look at when you're doing the market profile. So get well, take care of yourself first and foremost, but hurry back. We have broken down below really key support now in the S&P at that 1938 level, also in the NASDAQ, and again also in the New York Stock Exchange Index. We're going to be opening here in about an hour, and so we'll see, how the market's going to handle a 300-point down move in the Dow on the opening, which is a pretty big handle. But before, every time this has happened, we've had a pretty good rally. Whether that's going to happen again this time, remains to be seen. The Treasury bonds and Treasury notes are still firming up. We did have that big rally yesterday, given the fact that, the markets were going, totally nuts. And now we've rallied back and we're going above the 61% retracement of that move yesterday. So that's telling us that we got more strength coming in the bonds and notes. It looks like, I think we're going to get up to that 157 level during this run. And if it gets much weaker in the stock market, you'll be looking at a flight to quality type scenario. And then the market will probably even, maybe could even extend past that a little bit. That's the way, it looks like, from the technical perspective. I said this many times, and also in my weekly recap, that I have not seen this many really, really bearish patterns unfold like I saw over the weekend. I mean, everything that I looked at, it looked horrible. There's probably a few bullish charts in there. There has to be, because not the whole world is falling apart. But overall, I mean, if you look at the banking index, the oil index, anything, they all look absolutely horrible. John Murphy even commented in his weekly comments that he had not seen this many bearish patterns that look really bearish, not just bearish, but really bearish. And that's another reason to look at. And he reminded us that, markets can follow their own weight. They're pulled up by, various types of news announcement and stuff like that. But when they finally roll over, they can drop of their own weight. They don't really need any news of any kind. So, keep that in mind when you're watching these charts go up and down, like we have, and we'll just wait and see, what goes either here nor there. But right now we've got the NASDAQ is down about 90, it looks like, and we got the S&P down over 30, the Dow down just a shade less than 300. So it's could be one of those big round robin days where you have a big down move and then a big rally up and another down move. Who knows? We'll wait and see. We got the gold markets under pressure, which doesn't surprise us. We thought there was going to be some really strong resistance in that gold up around 1145 level, and that's exactly what we got to. And so this is not a surprise. What we'd like to see now is what the next level of support is going to be, and I assume it's going to be down around the 112. Let's 112. Let's try $1,112. That's what it should be. 1 second, please. The doctor has put me on some antihistamines before my surgery this morning, and the reason why I'm doing this show is I'm so darn nervous that I don't have anything else to do. I'm certainly not trading today, but it is that doesn't mean I don't have positions on, but I'm just not trading. It is a little nerve-wracking because I do not like going to the dentist. I can handle most everything except I don't like dentists. And I mean, I like him as a person, but that's just one of the professions that I wish I didn't have to go through. So far, I don't keep my teeth in a jar, but maybe that's coming down the road. Who knows? I'd like to have nitrous oxide, but they don't use that here in Philadelphia, because we're here in Philadelphia at the medical center here, where my son-in-law is a doctor here. So we'll be just doing a regular thing. It's not going to be too bad. I'm not going to worry about it. As long as they can keep me medicated, I'm okay. That's the bottom line. All right. The next question, someone asked a question about the VIX index, and frankly, I would like to just turn that over to Basil when he comes on, because he certainly knows more about it than I do. And there's so many different ways of looking at that darn thing. I really don't understand, how the VIX index can even be anywhere near where it is. I mean, you stop and think, what these stocks look like, boys and girls, and if you look at the VIX index, something's not right. I mean, nobody is absolutely scared of this at all. And as one of the charts that I posted yesterday was from, Ed Carlson from the Seattle Technicians Association. And, it showed that most people didn't do anything during the big drop into August 24th, which was the smart thing to do, because the market rallied back for 3 weeks after that. But they were not going to sell their stock. Why would they? I mean, the market always finds a bottom and turns around and goes up. So we'll have to see if it's going to do it again this time. These charts look really bad, boys and girls. That's all I can tell you. I mean, just look at the banking index if you want to see and this is where we're supposed to get, a lot of our, this was one that led us up. This is the one that was the leader of the pack. And if you look and see what it's done just in the last couple of days, we're ready to take out that August 24th low probably today. That would be my guess. I mean, it's getting very, very close. Now, there was a real interesting chart that I found on the internet. Someone brought it to my attention, and that is that shows you the relationship between the S&P and the rotation of the cyclicals. You know how the cyclicals, outperform when it's defensive, and the defensive outperform the cyclicals. And you can see that this diversion, started way back in 2011, and we haven't seen anything like that in a long time. And now what we've done is we've broken that long-term downtrending line, and that means this thing should flip around again, and people should start looking at defensive issues, and they're not doing that as of yet. So there's a lot of unanswered questions here, but there's no fear in the market at all. You can see that in the VIX index, and people will buy things on the way down. And like Warren Buffett says, he likes down days because it allows him to buy stocks at a cheaper price. That reminds me of Bernard Baruch, his autobiography, My Own Story, and that is. We're going to take a look at live cattle. Of course we will. 1 second, and I will get it ready. But Bernard Baruch said in his book is that, the worst thing that a person can do is to average down a losing position. And the reason for that is you're adding to a losing position. Everything you're doing is wrong. First of all, your analysis is wrong because the market is not going in the direction you thought. Second of all, you're increasing your risk exposure, right? And third of all, you're not using any good money management technique if you're doing any of that stuff. So all the things that you're doing are bad. So it's not a very, very smart thing to do is use dollar cost averaging. I know they talk about it, but Bernard Baruch, one of the smartest dudes around doing this stuff back in the 20s, 30s, and 40s and 50s, he swore by it. He was very, very successful at it. So don't average down. That's the wrong thing to do. It's better to, find a place where you can circle the wagons and find a spot where you're going to be able to, get a place to go in and buy and then have a chance to look at it. But if we take a look here at the, let's just get this up for this VIX index. We'll take a look at it here. You'll see that we are in an area where there's just no fear in the market at all. It's coming, but it's not here right now. We'll have to wait and see. We'll see. That's it. Someone made a comment here that Jesse Livermore used to add to so-called losing positions all the time. I would highly disagree with that, Michael, because I read that book, Reminiscence of a Stock Operator, at least 50 times, and the number one rule on this oil painting that is in my office is never add to a losing position. That's the one that did me in 1974. And this is the type of market that we had, is that I would buy these 16-day cycle lows. Well, they would bottom on the 16th day like they always had, but they would only rally for 2 or 3 days, and the rest of the days were down. And after a couple of those cycles, you're really heavily exposed because you've been adding to a losing position. Your equity is going down, and as it goes down, it starts going down faster and faster. And I got caught in the October 1974 crash. And the market bottomed in October of that year, the stock market and the commodity markets. And then it made a double bottom in December of that year, around 500 in the Dow, and then it started its move up. But it did not take out from 1968 through 1983. 83. The market went nowhere. It had topped at 1,000 and went down to 500 and stayed between 1,000 and 500, I think, for 15 years, and then it finally, popped above the number of what we're looking at right now. So anyway, now we're going to bring up the cattle chart here for our good friend Marshall. God bless you, Marshall, for all the wonderful things you do with your prayers for me and Mark and everybody. Okay, there we go. And we have a comment here. We see cattle. I believe cattle are trading around 139 right now. So they've had a pretty good bounce, but I might have missed it, but I would prefer to wait to see one more jab down on this. It's a beautiful pattern. We hit the top end of that range at that 135, 85 level. And so it looks like might have missed it, but I want to wait just a little bit to make sure that it's not going to come down one more time. I don't like chasing markets, and they don't like chasing me. So it all works out for the best, the way I look at it. Okay. All right. Just a question that Mike has about the Nelson Bunker hunt, adding to losing positions in the silver market and cornering the silver market. I worked at Drexel Burnham, and we did a lot of clearing for Lamar Hunt, Nelson's brother, and I don't know whether he had such large positions on. I frankly never saw the equity run, so I don't know whether you added to losers or not. All I know is that when they finally shut the door on him, they changed the rules. It was a liquidation only, and they didn't allow the people to do it. So we'll be able to wait and see. Someone's asking me a question about SH. I don't know if they want me to shut up or as SH as a stock. Could you elaborate, Paul, please, what SH happens to be? I don't know what it is. Not only because I don't do stocks too much. So if I get a little help here, we'll see. We'll see which way the cookie crumbles here with SH, whatever it happens to be. I'll find out during the break whenever we. Yeah. Oh gosh, boy, this went really fast. I'm glad you asked me to do this show today because I'm a little nervous, as you can probably hear from my voice, because I don't like Dennis and I don't like keeping my mouth open for an hour, which I've just been doing, isn't it? Oh my goodness. Short, does that mean short the short the S&P? Is that what that means? Okay, yeah, that would be. I'm really bearish, boys and girls. I've been bearish for a long time, and when we gap down below the July lows, way back in August, early August, that was a really bad sign. To me, it looks like this leg's going down to between 1,700 and 1,500 in the S&P. And the reason why I think that is that they're heading that way, and they're moving there quickly. And the VIX index is, it's not. No one's even scared yet. Something's not right here. I think there's going to be an outlier shock coming. I don't know if it's going to be geophysical, geopolitical, or economic. I don't know, but there's something out there that some people are seeing and others aren't. And believe me, these people out there are not technicians. They don't do what we do. They're looking at the fundamentals, and yeah, they still look good. Yeah, still got 7% GDP in China. Of course they do. 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. This coming Tuesday, September 22nd, Tom O'Brien will publish the 700th issue of his weekly newsletter, The Gold Report. It's amazing to think that Tom started his newsletter over 13 years ago when gold was trading under $300 an ounce. To celebrate the 700th issue, you can sign up right now at a 20% savings off the regular monthly price, and you can lock in that low rate for as long as you remain a subscriber. The Gold Report is Tom's weekly newsletter covering the gold market as well as a variety of gold mining equities. The Gold Report is published every Tuesday afternoon with a market update sent out to subscribers on Monday mornings. Tom will walk you through what's going on in the gold and metals market each week, as well as providing specific buy and sell recommendation on the mining equities themselves. Now is the perfect time to sign up for the Gold Report. The 700th issue is published Tuesday, and that's when this sale ends, so act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Okay, we're back, folks, and we've got the Dow under a great deal of pressure, and we've got the S&P under some pressure. We got the NASDAQ under some pressure. So as we say in the trade, they're under pressure. How the market's going to end up today or not, I don't know, but we are breaking major support here. And, we're only 100 handles away from the low that we made back at 1831 back on the 24th of August. And going below that sets up the next ABCD leg that brings it in around 1550 in the S&P. Whether that happens or not, remains to be seen. Right now, we're having a 61% pullback here in the crude oil at the 45.20 level. Whether this is going to be a major support, but it's trying to form a bottom in oil around this level. Whether it continues to try to find a bottom or not, or actually does, it remains to be seen. But this would be the best spot to look at it from the long side, if that's what you like, because there's a very low risk at this point at the 45.30 level in the heating oil. I'm not making that recommendation. I'm just telling you that that's where we are at this particular time. We had one other question about cattle while we were gone, and they've had a pretty good run, a little bounce off the bottom anyway. We still want to wait because cattle have a tendency to go back and, either make a 3 drive to a bottom pattern or go down and make the longer term pattern anyway. So there's nothing we can do with the cattle market other than to just sit on our hands and wait to see how things actually unfold. So as we come into this day before the equinox, which will be a pretty significant day, I believe, we also have a Venus trine Jupiter, which is usually pulls the market up into that, but this time it's doing the reverse, and that comes in tomorrow. So I'm looking for a short-term bottom somewhere between the 23rd and 24th, and then we'll see, what the next episode will be, after we get that bottom, if in fact we do get it. But with the market down this much this early, the odds are it's not going to stay down. It's probably going to get a rally after the open. How much of a rally remains to be seen, but that's what the usual case is you'll get a little bit of a bounce from that level. Hopefully we'll have John Logan coming back pretty soon, so we'll wait and see what happens. So anyway, I will pleasure setting in for him today, and he always had such great information. I wish I was able to have him on the air, because I rely on some of the support and resistance levels that he gets with Market Profile, because I found that they are pretty darn accurate, and he does a good job with the positioning of some of these things. So we want to wish him a speedy recovery, because you would have an appendectomy as you reach your, of course, he's still a really young man. I don't even think he's 40, but, even then it's a pretty tough. I had my appendix out when I was 15 years old, and it burst. And so I was really sick. I almost, bit the bullet. But fortunately, I was able to pull through. And here I am today, going in for root canal. I wonder if that's a side effect of appendectomies. I don't think so, given the fact that I have a slight medical background. Being a pharmacist, I don't think it has one effect over the other. Anyway, that's it, boys and girls. Live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.